Welcome to Informed Investor. India's fast-moving consumer goods, or rather the FMCG industry, is showing some promising signs of growth in the September quarter. This sector is indeed important as it is often considered as an indicator for overall economic recovery, consumer sentiment and purchasing power. So let's jump into the data to see how the sector fared in the recent quarter. The FMCG sector witnessed sales volume growth of 8.6% in the July to September quarter, which also turns out to be the highest volume recorded by the industry in the last 9 quarters. In terms of value growth, the industry clocked 9% growth as compared to the 9.2% growth recorded in the same period last year. When inflation was at record high levels, the FMCG industry had witnessed a high price-led growth in the last 5 to 6 quarters, though the volume was under stress. However, the trend has started reversing with inflation cooling down, thereby driving volumes. When looked at the breakup, rural markets are showing signs of recovery with consumption picking up and growing 6.4% in the July-September quarter, while urban markets are maintaining a stable rate of consumption growth and grew 10.2% in the recent quarter. This indicates a positive consumption pattern at an all-India level. Generally, high inflation adversely affects household consumption as consumers, especially in the rural markets, cut spending. With the inflation cooling down in the last few months, this has helped consumers, giving the necessary impetus to spending power of the consumer. This has also led to an increase in spending on discretionary categories such as home care and personal care products. Now, when looked at the top 4 companies of the FMCG sector, the total revenue or the net sales of all 4 companies witnessed a reasonable growth over the previous quarter in the year-ago period. When looked at the EBITDA, which is an important profitability measure before stripping down non-cash items along with interest and taxes, saw a healthy growth in this quarter 2 of fiscal year 24 as compared to the year-ago period. Ultimately, the final profit level or the profit after tax for 3 out of 4 companies saw healthy double-digit growth, while Dabur reported a 6% profit after tax. On an overall basis, inflation cooling down in the country within the tolerance band of the RBI and the recent decline in unemployment figures and LPG prices have significantly contributed to the growth of this sector as consumers are willing to spend. Furthermore, India is in the midst of the festive season, which usually leads to an increase in consumption and spending patterns that sees households spend on everything from appliances to cars to new clothes and gifts, which bodes well for the FMCG sector. Moreover, consumer goods companies expect improved demand trends in the second half of the fiscal year, helped by slower inflation, rural demand picking up, and the government spending ahead of the general elections. Having said that, this is me, Rahul, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com